let's talk about stock markets. Why? Because I recently started trading and investing in the stock market, and I built a portfolio of stocks that I want to grow over time. I'm not going to reveal my portfolio just yet, but I do want to start talking about it and digging a little bit deeper into the stock market, into stock investing, S&P 500, NASDAQ, all that good stuff. I am by no means an expert, and I am by no means a financial advisor, and this video is not professional advice. Everyone should take their own advice and take their own responsibility when it comes to their money. With that said, I do want to share my own experience, my own thoughts, my own ideas about the things that I do, and investing in stock is just one of those things that I've recently got my foot into, and I would love to share it with you, with the audience. If this video gets any traction, if you find this video interesting, consider subscribing to my channel, as I will post much more videos of the same. Let's get started. So for everyone who is not investing in the stock market, you would probably be surprised to know that the last 2 weeks were a disaster, to say the least. Stock market, I wouldn't say crashed, but it went down hard. Tech stocks leading the pack of the snowball effect. It's been called a sell-off, right? They've been dropping like flies, and it seems like they hit some sort of a ceiling, right? Amazon was kind of capped out at $200 per share. A lot of our tech stocks were kind of like capped out at their ceilings, reaching new highs, and a lot of investors, I think a lot of investors kind of started thinking about, you know what, maybe it's a good time to take some profits, a good time to take some money out of the game and, de-risk their own portfolio a bit, which obviously caused a ripple effect, and retail investors, which are just normal everyday people and not institutions, that's kind of caused them to start a snowball effect of selling off shares, and that caused the stocks to decrease even more. It was also a very hectic week even in the last 2 weeks in the terms of earning calls. An earning call, it means that when a company is public, every quarter they need to report their earnings, report their expenses, pretty much give a very detailed report of what has been going on in the last couple of months. So in the last 2 weeks, a lot of these big companies had earning calls, and they started reporting. Companies like Microsoft, Google, Amazon all reported their second quarter earnings for 2024, and it was a doozy. Revenue was actually good for most of these companies, which means the revenue grew. What investors were actually looking for was the AI cost. Now, let me explain what I mean by that. Everyone knows, unless you've been living under a rock, that in the last 18 months, almost 2 years now, companies were investing so heavily into AI developments. The FOMO was real, right? Fear of missing out was real. And they were so afraid to be left behind that they spent an enormous amount of money developing and researching AI, right? Sometimes even to the point of not really knowing or not really having a solid plan of what they want to do with AI, but they just knew that they need to keep pushing forward, right? It even got to a point where a seasoned executive from one of the top companies went so far as to say that it is better to increase AI spent right now than to be left behind. And honestly, he kind of makes a good point, right? I don't think anyone will doubt that AI is the future, and that it will be in our lives probably forever, or at least for a very, very long time. So it makes sense that companies that want to be relevant in the next 10 years, maybe even 20 years, must invest and develop AI products right now. However, having said that, the everyday investor doesn't always want to wait that long, right? It doesn't, if you invest in something and it takes 10 years for you to see any return from it, you know what? Sometimes it's not exactly what you want. So after 18 months or so of letting the companies go slide, go on a free fall and spend as much as they want on AI developments, investors kind of cooled off and they started saying, you know what, let's slow down, let's start asking the hard questions. When is this going to start making any money? And these are legitimate questions from investors, because not all investors have the foresight or even the bandwidth to wait 10 years to see a return. So, it's very nice to look into the future, but for most retail investors, they need to see a return within a few years, not 10. All right. So this was the first snowball crumb that started rolling, right? That started the sell-off that happened in the last 2 weeks. As many tech companies reported massive expenses increases in AI, but no real growth in revenues from AI products. While other avenues kept growing, AI products and AI revenue was kind of stagnant. The second thing that happened in the last 2 weeks is that the job market report that got people freaking out, it was not as good as a lot of people expected, right? Analysts expected that the job growth would be something in around 160,000 new jobs, and eventually the report actually said there were only 114,000 jobs created. So naturally, everyone freaked out. Everyone started talking about recession again. Everybody started talking about the economy again and how bad it is. This caused more fear in the markets, and it got more people further panicking and further selling their stocks and taking profits, because they were fearing the economy was not going into like a soft landing, which we heard so many politicians talk about for so long, right? And it kind of makes sense. When people are scared, they want cash. They want their money with them. They don't want it in companies or in stocks that they fear might not be here in 5 years, right? Even though to me that just sounds ridiculous, but it is what it is. So the third thing that happened was Japan. Yes, Japan, the country. If you don't know, Japan interest rates are very, very low, and they have been very, very low for a while now. They have been even lower. So the trend in the last couple of years with institutions and very big investors was to because the interest rates in the US started rising, but the interest rates in Japan was close to zero, right? The yen was so cheap that a lot of investors took out loans from Japanese banks in yen, then converted that into dollars and moved it into the US and into the stock markets. And realistically and honestly, even conservatively, they were making between 5 and 10% per year yield on their money, which is a huge gain to make if the cost of that money was roughly 0% or even very close to 0%. Think about it. So what happened? Well, the Federal Bank of Japan said enough is enough, and in an effort to strengthen the yen against the dollar, it decided to start raising interest rates again after a while, after a couple of years. So he raised interest rate twice in a very short period of time. What was the outcome of this move? Well, as you might have expected, this got investors who borrowed money, maybe even a lot of money, to freak out again and to be in a small panic mode that their free ride is now over, that now the profit margin is decreasing. So this will probably come to an end, so they started selling their assets to pay off their loans, right? This makes a lot of sense. So this was the last 2 weeks roughly. All the things that I just mentioned in this rant caused a 2-week sell-off. Stock markets went down, I think probably the worst sell-off since 2022. But then came Thursday, all right? Then came Thursday that kind of changed everything. The markets opened with a storm, finishing the day with a huge gains. S&P 500 increased a lot, Nasdaq increased a lot. Friday was even, I want to say better, but it just continued the trend. Everything closed out in the green. And in the last 2 days of the week, the markets gained back almost all of the loss they had in the last 2 weeks. With the Niki is the Japan main stock market exchange, gaining back almost all the 12% loss that it had in the last week or so. Now, why did that happen? In my opinion, and remember, this is just my observation and my ideas. This is not professional financial advice. You are responsible for your own money. Remember that. But in my idea, it has a lot of different reasons. But from what I've read and believe, I think the sell-off was more of people and institutions wanting to take some profit out of the markets and off the table. After an amazing 2-year run, we had a very good bull run. 2 years. In the last 2 years, people made a lot of money in the stock markets. So I feel like a lot of people and institutions just wanted to get their money and to get their profit back. Also, let's not forget that less than 100 days from now, there's a general elections coming, and there is uncertainty about what kind of government we're going to have. It doesn't matter who you voting for. It doesn't matter who you trust. When there's uncertainty, markets react, right? So companies wanted to take the edge off, wanted to take some profit and capitalize a little bit, which caused a snowball effect of a sell-off. But in no way, shape, or form do I believe this is a reason for concern. I might not be trading for so long, but I do know that similar to business, you do not panic and sell when things go against you, right? A little bit. It's a long-term game. Investing in the stock market should not be done if you plan on doing it for only a week or two, right? This is a long-term investment vessel asset. You should think in years and not in weeks. So with that mindset, 2 weeks out of a year is nothing. So you have to stay the course and wait it out. And with that, the markets bounce back. This does not mean the markets will not go down again, but in general, I think the economy is doing better than a lot of people expected. And after the elections, no matter who wins, no matter which side, no matter who you voted for, I think the market will react positively because they love stability. Once the elections are over, we will know what type of government we are going to get for the next 4 years. And again, this is another form of stability, knowing what's going to happen. So this was the last week or even 2 weeks, crazy weeks indeed, but it's never boring in the markets. My own portfolio was up and down all over the place. It's been hectic, but I love playing this game. Like any money game, this is a very interesting one. I will give my rundown for next weekend. And as always, if you like this video, if you gained any value from it, it takes me a long time to research it and create these videos for you. I would appreciate it if you give me the thumbs up. Consider even subscribing to catch my latest videos. I have a large library of videos by now, and as always, I'll see you in the next video.